Welcome to our new IFRS Educational Fund Service. It's an initiative of OJ Inspiration Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards IFRS through a multiple choice question and answer approach. It is intended to make learning verification, mastery, and intellectual assurance fun. In this session, we shall be considering cumulative set 210 questions to which the answers have been provided on IAS 38. This is standard on intangible assets. Viewers or subscribers have 30 seconds to select or choose the answer to each question. The answers to the cumulative 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 11. The change in the useful life assessment from indefinite to finite life for an intangible asset is treated as A. Change in accounting estimate. B. Change in accounting policy. C. Voluntary change in accounting policy. D. Policy election through which A or B can be applied. E. Policy election through which A or C can be applied. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 12. Intangible assets held for sale by an entity in the ordinary course of business is reported in line with A. IFRS 15, B. IAS 38, C. IAS 2, D. IFRS 5, E. IAS 37. Time counts. Ten seconds gone. 20 seconds gone. Time up. Question number 13. Certain intangible assets can be reported in line with A. IAS 12, B. IAS 19, C. IFRS 17, D. All of the above, E. None of the above. Some counts. Ten seconds gone. 20 seconds gone. Time up. Question number 14. Which of the following is not associated with indefinite life intangible assets? A. Historical cost. B. Carrying amount. C. Accumulated amortization. D. Accumulated impairment losses. E. None of the above. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 15. An intangible asset is identifiable if it has some of the following features except A. Capable of being divided from an entity and sold. B. Capable of being controlled. C. Capable of being transferred. D. Capable of being licensed. E. Capable of being rented. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 16. The measurement of intangible assets acquired by way of government grant is done in line with A. IAS 20, B. IAS 38, C. IFRS 13, D. IFRS 15, E. IAS 8. Some counts. Ten seconds gone. 20 seconds gone. Time up. Question number 17. Intangible assets acquired by way of government grants can be recognized initially at A. No cost, B. Historical cost, C. Present value, D. Nominal amount, E. Fair value. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 18. Amortization method in IAS 38 is used for A. Intangible assets with indefinite lives only. B. Assets of wasting nature. C. Intangible assets with finite lives only. D. Intangible assets with finite and indefinite lives. E. Intangible assets acquired, not internally developed. 10 counts. 10 seconds gone. 20 seconds gone. Time up. Question number 19. Impairment of an intangible asset, its indefinite life is A. Done quarterly, B. Done half yearly, C. Done at interim reporting, D. Done whenever there's indication that the asset may be impaired. E. Is not done given its nature. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 20. One of the following is not a class of intangible assets. A. Brand names. B. Must-heard and publishing titles. C. Recipes and formulae. D. Intangible assets under development. E. None of the above. Some counts. 10 seconds gone. 20 seconds gone. Time up. We proceed to reveal the answers. Question number 11. The answer to question number 11 is A. Change in accounting estimate. A. Change in accounting estimate. The change in the useful life assessment from indefinite to infinite useful life is accounted for as a change in accounting estimate in line with IAS accounting policies, changes in accounting estimates, and errors. A is the answer to question number 11. Question number 12. The answer to question number 12 is C, IAS 2. C, IAS 2. Where another standard prescribed the accounting for a specific type of intangible asset, an entity applies that standard instead of IAS 38. Intangible asset held by an entity for sale in the ordinary course of business is accounted for in line with IAS 2 inventories. C is the answer to question number 12. Question number 13. The answer to question number 13 is D, all of the above. Where other standards prescribes the accounting for specific types of intangible assets, an entity applies those standards instead of IAS 38 intangible assets. IAS 12 income taxes deals with temporary difference arising from intangible assets. IAS 19 employee benefits applies to intangible assets arising from employee benefits, and IFRS 17 insurance contracts prescribe the accounting for deferred acquisition cost, which is a form of intangible asset. D is the answer to question number 13. Question number 14. The answer to question number 14 is C, accumulated amortization. C, accumulated amortization. Indefinite life intangible assets are not amortized as they do not have finite number of lives. Therefore, accumulated amortization is not associated with indefinite life intangible assets. C is the answer to question number 14. Question number 15. The answer to question number 15 is B, capable of being controlled. B, capable of being controlled. All the options of the answers except option B are features of identifiability of intangible assets. Capable of being controlled or control is a feature of intangible assets, but is different entirely from identifiability, which is another condition for an asset to be qualified as an intangible asset. B is the answer to question number 15. Question number 16. The answer to question number 16 is A, IAS 20. A, IAS 20. The measurement of intangible assets acquired by way of government grants is done in line with IAS 20, accounting for government grants and disclosure of government assistance. A is the answer to question number 16. Question number 17. The answer to question number 17 is E, fair value. E, fair value. Intangible asset acquired by way of government grants can be initially recognized at fair value as an option. The other option is to recognize the intangible asset initially at nominal amount plus any expenditure that is directly attributable to preparing the asset for its intended use. E is the answer to question number 17. Question number 18. The answer to question number 18 is C, intangible assets with finite lives only. C, intangible assets with finite lives only. Amortization method is used to allocate the depreciable amount of an intangible asset with a finite useful life. C is the answer to question number 18. Question number 19. The answer to question number 19 is D, whenever there's indication that the asset may be impaired. D, whenever there's indication that the asset may be impaired. IAS 36 impairment of assets requires that an intangible asset with an indefinite useful life is tested for impairment, 1, annually, and 2, whenever there's an indication that the intangible asset may be impaired. D is the answer to question number 19. Question number 20. The answer to question number 20 is E, none of the above. E, none of the above. Brand names, marketed and publishing titles, recipe and formula A, and intangible assets under development are all classes of intangible assets. E is the answer to question number 20. That is all for this set 2. Thank you for joining us for this set 2 of IAS 38 intangible assets. We invite you to subscribe to our channel, share our links, and invite us on your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the service are reserved for OJ Illustration Limited. Thank you once again, and bye for now.